City Lodge Hotels last week reported a 5.5% increase in revenue to 790 million rand in the year to June, but a decline in occupancy levels and a significant increase in operating costs hit headline earnings, which were down 30% to 163 million rand.
Market cap of 2.5 billion, price earnings 20.5 and dividend yield 3.8. Byron, Clifford Katz, I heard a comment that he made on Friday where asked if he could, why don't they go in deep discounting, and he said there is so little demand out there that even if we drop prices, we wouldn't get more occupancy. These guys are really having a tough occupancy rate down to, 56%. If they hadn't put the new hotels, it would still be down to 62. Not a bad number, but tough space.
Yeah, it's very tough. I mean, they've got five-star hotels charging their sort of rates at the moment because, things are so tough. I like the space, I'll be honest. I think that it's similar to the construction stocks. We're almost at the bottom of the cycle now. Obviously, global activity has really slowed down. City Lodge are a good proxy for business travel. But I'm bullish on overall global expansion. And I think earnings from big S&P earnings that have been announced are going to start filtering through again, China growth. And we're going to have more people coming to visit our shores because, we're the gateway to Africa. So like I said, I like the space. The assets, because City Lodge are one of the rare hotel companies that actually own their hotels. Management value their assets at over
3.6 billion, market cap 2.5. So
you've got that underpin, you've got that property underpin, and I know if the property is not bringing in the yields, that's why it's trading at a discount. But you've still got that underpin, and it's a nice safeguard to have when you're buying.
Okay, what's fascinating, we know that the Don Group of hotels are actually changing some hotels into apartments. Apart from that, I also know that the Grace in Rosebank is actually closing down because there's just oversupply of hotels. I know you're talking about this very bullish story, but then what about technology and the likes of Skype, where you don't actually need to go to places anymore to close business deals?
That is one of the arguments against it. I don't think that's going to happen immediately, or even in the long term, maybe 15, 20 years time, but we're still dealing in Africa, and people, when you're having business meetings, you want to meet face to face if you're dealing with big transactions. When you talk about the hotel closing in Rosebank, I've always seen City Lodge as a bit of a Mr. Price of the hotel group, and it's not one that's going to have to close down any hotels. I don't believe. People, it offers you great value for money. People are still going to be using their hotels. They're going to stop going to the fancy ones and start using City Lodge.
And Oliver, even in these tough times, operating margin at 31.9, last year was 42.7, but heck, 31.9, that is an eye-watering operating margin.
Yeah, definitely. But like Byron says, once again, you've got to get that growth, and I think, if we do have a slowdown, these guys are really going to be hurt. But the thing, once again, which is interesting, is also they're looking to expand into Africa. I'm sure I've never been to most parts of Africa, but don't know what the hotels would be. But I'm sure something like a City Lodge could do very, very well.
Typically, you have one or two 5 stars that charge you hundreds and hundreds of dollars.
Yeah, exactly. So possibly that's what could turn them around.
Exactly, and actually I'm glad you mentioned it, because the likes of Ghana only has really 2 5-star hotels, and we know that there's just such huge expansion, such huge economic growth, and these hotels there just cannot cater for the demand. So definitely onto something there. Do you think they should just predominantly be focusing on Africa expansion no matter what?
Yeah, definitely. I think they probably got hurt a lot by the World Cup, built a lot of new hotels, and that hasn't really done very well for them. So that's what's cost them a lot of money. So I think that's probably the best way where they can look to expand into Africa and try and move on from there.
But we're going to see a lot of operational leverage. I mean, I imagine having a hotel open, if it's 50% full or 100% full, there's not a doubling in costs. I mean, you've got to have X certain base costs. So when things start to get better and they can take it occupancy, say, from 56 to 66, we're going to see a fair kicker in the earnings?
Definitely, because they still managed to grow revenues between where they had that huge expansion. I don't think the market has fully factored in the expansion that they've done. Yes, operational costs are up, but once they start picking that occupancy rate, that those earnings are going to increase fantastically because of the
I mean, they increased their beds by almost 30%.
Yeah, and it's always been their business model, and they've always been known as a well-run business and making the right decisions. What they've done is during tough times, they've picked up their expansion and gearing themselves towards growth. And as Clifford Ross, the CEO, I saw he was asked whether he would have done the expansion plan if it weren't for the World Cup, and he said they would have gone with the same business model and done the same expansion even if it weren't for the World Cup. Where the World Cup hurt them was where everyone else expanded at the same time. But again, like I said, our population's growing. I think we've got great leverage into Africa as business hotspots. I think they can be perfectly placed for that.
Hot or not?
Hot.
Hot. You buying? You have been accumulating?
And again, they're fantastic dividend payer.
3.5,
So
3.8.
You're sitting there and you're getting paid, and 3.8 is obviously earnings have come down. It's low for their historical.
They've typically been high fours.
Yeah. So you're sitting there, you're getting paid. It's another patience one. You're going to have to be patient on this one, but at these levels, I think it's a great buy.
Okay, Oliver.
Yeah, I mean, I think once again, if you're looking at things that have come off a low base, construction, City Lodge, they've really got beaten up a lot lately. Accumulate and just forget about it, I think, and come back to it, receive the dividends, keep on reinvesting. And yeah, let's see how that goes with this expansion. I hope Skype doesn't sink them. But yeah, so I think so. I think hot for me.
Simon.
Hot's a strong word. I mean, I don't know if they're going to explode in the next year or two, but I like them. I have some. I own some in my portfolio. Bought them about 2 years ago for exactly the price they were trading at today. But
did you feel that you wanted to sell, or
no?
No.
The numbers didn't overly bother me. This is, the story is Byron's painting it. This is a solid operation. They're incredibly well positioned. If you're worried about double dips and recessions and everything, stay far away. If you think that economically we're going to move forward and see growth, etc., I think we've got some great leverage play here.
Okay, now time to get into our Hot Stock picks, and Byron, let's start with you. Yours is Richemont.
Yes, I often talk about the Chinese growth story, and I think Richemont is almost the perfect way to benefit from what's happening in China at the moment. We still have them growing at over 9.5%, and that is off a high base already. Yeah. And what's sort of become the fashion in China is they've almost become obsessed with the Western way. And it's extremely fashionable to announce your arrival into like the middle class with a fancy watch or a fancy pen.
That costs more than a decent car.
Yes. I mean, this is high-end stuff, and great margins as well. And that's where Richemont are experiencing such fantastic growth is in China. But at the same time, we still have seen good growth coming from the United States, traditionally its biggest market, which is Europe. Even in Europe, the growth has been fantastic. It seems like the uber rich are not as affected by market.
Yeah, I mean, Carlos Slim lost 15 billion last week, so now he's worth 50
I'm sure
billion.
He can still go buy his Cartier watch. And what's happening as well is a lot of tourists coming from China are going into Europe and going into these luxury goods stores and buying in Venice and Paris and that kind of thing. And I just think, Richemont is perfectly geared to benefit from this growth story. You've got the Johann Rupert factor. He's, renowned for making fantastic decisions and acquisitions at the right time. And I like the luxury goods space.
But beware, if US government officials do in fact take Warren Buffett very seriously, then we could see a new tax on the super rich,
those
right?
folks can pay tax and still buy overpriced watches.
That's enough for you, Richemont.
I like Richemont. The problem is it's always just so expensive.
And for you, Richemont?
No, hot.
Hot, even buy right now. Okay, so Oliver, your hot stock pick is Palabora Mining.
Yeah, PE ratio of 6.5, net profit was 306, now 758 million. Earnings per share 15.6, dividend yield of 12%. So sitting on a lot of cash. Very strong correlation with the copper price. It's owned by about 60% from Rio Tinto. And I also believe Anglo's
got a bit of a stake too.
Yeah, also got a big stake in it. Very cash-rich company. I think with Metarex, if they do get delisted, it's going to be the only pure copper play on the market. Yeah, I think, strong company.
And they're looking to expand life mine because their current life's, less than 10 years. I don't know the exact number. They're trying to the same mine, just give it a more longevity.
Yeah, exactly that. And yeah, I mean, a dividend yield of 12% in this kind of market, you know, I'm very happy with that.
Hot or not for you, Simon?
Yeah, I mean, we touched on it when it came out with the numbers. I like it. I'm not sure where they're going to get massive growth from in terms of they're going to plug along. They're going to be linked to the copper price. Again, if you like the copper story, if you like the
and
China
very good
story.
point that Oliver makes, that it could only be your pure copper play.
I think that's
Metrics is
100%. I think we're going to see some money flowing into there.
Byron?
Yeah,
You're saying
definitely,
something
Hot. I think if you analyse these earnings, you're getting a forward PE of around 7, 6,
Yeah.
so offering fantastic value.